Welcome to The Explainer. Today, we're diving into a massive macroeconomic splash that's currently sending some huge ripples right toward our personal wallets. If you've been reading the financial news lately and feeling this fundamental shift in the economic winds, you absolutely are not alone. So what we're going to do today is break down exactly what the data is telling us about this new economic reality. We're taking those dense, complex reports and turning them into clear, actionable insights for you. We'll be looking at everything from major leadership shakeups to some seriously wild contradictions in the stock market. Basically, the whole shebang, just to figure out what this actually means for you. Okay, let's dive right into this because 4.2%, well, that's the anchor of our current economic story. Financial commentator Graham Stephan recently highlighted this really dramatic surge in inflation. And look, a jump to 4.2% isn't just some dry statistic sitting on a page, it's a high-stakes alarm bell. Not just for the global markets, but for your everyday purchasing power. But we gotta ask, where exactly did this number come from and why is it happening right at this very moment? Section 1. The new economic reality, the big splash at the Federal Reserve. The source material points out a rather dramatic shift in U.S. economic policy, and it's triggered right at the very top. Kevin Warsh has officially replaced Jerome Powell as the chair of the Federal Reserve. Now, we're simply looking at the facts on the ground here, but make no mistake, this transition at the helm of the Fed marks a definitive, major shift in the direction of the country's economic policy. And whenever leadership changes at this specific level, the markets kind of hold their breath. They pay incredibly close attention to every single move that follows. So let's see how this all builds, because it's essentially a perfect chain reaction. It's exactly like a massive ripple effect spreading through the economy. Step 1. An energy crisis emerges. Now, this isn't just some isolated issue you see at the gas pump. It bleeds into the cost of goods and services literally everywhere. And that directly drives step 2, which is that massive 4.2% inflation spike we talked about just a second ago. Which, naturally, leads us to step 3, the immediate, heavy-hitting consequence of the Federal Reserve. Because inflation spiked so aggressively, the Fed was effectively forced to cancel their planned interest rate cuts. This sudden reversal of expectations, that is exactly what sparked such widespread concern and volatility across global financial markets right now. Section 2. Ripples across the markets. Chaos and contradictions. And this brilliantly illustrates the sheer undeniable contrast happening in the markets right now. I mean, on one end, we're seeing this intense hype and capital just flowing into what the source narrative explicitly describes as an overvalued stock market. That's happening right alongside the massive, highly anticipated public offering for SpaceX. There is just intense excitement there. But juxtapose that directly against a sluggish, visibly weak real estate market. It's honestly a tale of two completely different economies happening at the exact same time. You've got massive hype in equities and space tech, directly clashing with a struggling housing sector that is really feeling the heavy weight of those canceled interest rate cuts. And of course, we can't really talk about market contradictions without touching on the crypto space, right? Bitcoin is currently experiencing some pretty severe price fluctuations in response to this new reality. But the source points out a very specific catalyst driving this current wave. It's actually not just everyday retail investors panicking or celebrating. No, this volatility is being heavily influenced by large corporate holdings. See, when massive corporations adjust their Bitcoin reserves in response to shifting Fed policies and inflation, well, the entire cryptocurrency market feels the aftershock of those giant moves. Section 3. Your long-term protection strategy. Weathering the volatility. So the crucial point is, how do you navigate your own personal boat through all these choppy waters? The author's analysis actually serves as a really clear warning, breaking it down into 3 steps. First off, remain cautious. Don't let the blinding hype of something like a SpaceX IPO distract you from the very real reality of 4.2% inflation. Second, prioritize your personal financial protection over aggressive speculation right now. And third, maintain a consistent long-term investment strategy. Make that your anchor. Because honestly, consistency is exactly how you survive the deep uncertainty of whatever future policy directions are coming next from the Federal Reserve. Which brings us to our final essential question for you today. In a shifting economy, is your portfolio really built for the long haul? Take a second to think about those massive macroeconomic ripples we've just uncovered today. We went from sudden leadership changes at the Fed to energy crises to these wildly contradictory markets where space tech is booming while housing slumps. Can your own finances actually withstand those specific waves? It might be time to take a very close look at your strategy and ensure your financial ship is structurally ready for absolutely whatever comes next. Thank you so much for joining me on The Explainer today, and as always, keep learning.